Hi, good evening, everybody. Okay, just give me a second. So, so can you hear me? Everybody, audible? Okay. So, is there anybody who is attending this session for the first time? Any first timer? Anybody who for the first time? Okay. Okay. Santimano is for the first timer. Anybody? Anybody else who is attending it for the first time? Okay, only one. Okay, so now, Luzvi. Okay, Girish is also there. Luzvi, Girish. Now, how we go, let me tell you. So it will be easier for you. First, I take all the questions that you have already asked me while going through the sessions, right? So after going through the session, so there's a space where you can, related to that particular session, you can ask me questions, right? First, I'll ask this, first I'll take these questions. So once I'm through with those questions, then after that, I will take your questions directly. So what you need to do, so those questions are here. I will not, many questions are here. Anyway, whatever it is. So I'll call a name. So what you need to do, you need to click that reaction button. Okay, there is a reaction button somewhere. Can you see that? So there's a reaction button, and when you click the reaction button, then we'll see there's a raise hand button. Okay, so you click that raise hand button. When you click the raise hand button, your name will come to the top at the top, and then I will take you in, and we can discuss. And please do not hesitate, because why I'm saying, you can ask me questions in Hindi as well as in English. Yeah, dono chalta hai, right? Hindi, English. Okay, so please ask, and even if you think like this is a very simple question, ask simple question. Okay, so because this is very important, because it's not only you, there are a lot of people who are having very silly questions. You can say silly, stupid question, right? So the stupid questions are the most important questions, right? That compels you think most of the time. Okay, so even if it is you think it's a stupid question, it's a very silly questions, but still, you please ask. So how to ask? That same way. Click that reaction button. So when you click, after clicking the reaction, you'll see there is a raise hand button. Click that raise hand button, then your name will come at the top. And when your name will come at the top, then I'll take you in. Okay. So this is how it is. So right now only 5 are there, but slowly it increases, right? Okay. So now, so there are so many. Oh my God, there are so many spams. Oh, a lot of spams. Mr. Govardhan, are you there? 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 Mr. Govardhan, Arigana is not there. Okay. Is not there. Okay, you need to click the raise hand button. So there is a reaction button with a smiley. Click that. Then you click raise hand, and your name will come at the top, and I'll take you in. Mr. Govardhan is not there. Okay, so he has some questions, and then after that, in front, Priya. Priya, are you there? Priya, Priya, are you there? Priya, are you there? Priya is also not there. She is asking a very good, very general question. So I'm just reading it. Sir, is term insurance better or term insurance with return of premium better for life? Return of premium is not better for life. For life, always term insurance is better. Okay, always remember that. Return for premium is you'll get very low return, very low return. It's a wastage of this thing. But still, you can compare. You can compare the return, zero return, and then if you put it is somewhere else, how much return you'll be able to generate. Okay, that compare you can do, but otherwise, thumbs rule is it is always better you buy pure insurance. Okay, not even because nowadays people are becoming. Okay, just a moment. Okay, let me record it. Okay. Oh, it's recording already. Okay, that's great. Okay, so now what happens? People are becoming more and more aware. Okay, so earlier people didn't have idea, right? Now everybody used to buy all the endowment plans. Nowadays, people like me who are educating people about proper financial instruments and all, giving proper financial knowledge. That's why demand for term insurance are rising. So what now these guys are doing, since demand for term insurance is rising, so they say, okay, it's term insurance only things that will return you money. Okay, so actually that return is completely waste. Okay, because you are not getting anything. No return is there. So if it is after 20 years, the value of that will be nothing. Okay, so it's always better you go with term insurance. So after that, yes, then Prabhu, Mr. Prabhu, are you there? Mr. Prabhu is there. You see, when you ask question, you must be here. Okay, so then only we'll be able to discuss. Otherwise, there is how can we discuss, right? So if you ask question there, then you can come. Bonus, family budgeting, why insurances are not following asset and liabilities. Okay, this is also one question Prabhu is asking. Beautiful question he is asking. And it's very general question. All the general questions I'll ask, but I'll respond. But if there are any specific kind of questions, then I'll not respond. Okay, because there is no point. So he's asking very general question: why insurances are not falling under assets or liabilities in family budgeting? You see, insurances are, as I have told you many times, insurances are basically they are for insurance purpose. They are not for investment purpose. Okay, so this is also one reason why I keep on saying separate. Insurance, what happens now? Insurance gives some return, so a lot of people they tend to put under assets, right? Yeah, it is an asset that way, but it's a very bad asset. Okay, so that's why insurance, actually, really speaking, insurance is an expense. Insurance premium is an expense. Okay, so it is not assets. It is neither assets, it's not liabilities. Okay, it's an expense to protect yourself. Always remember that. That's why I keep on saying, do not mix. Have proper insurance, proper investment. Investments are assets. Insurance are not assets. Now, what happens when you mix up means endowment policy. Endowment policy, it's actually mixer, right? So going by finance concept, it is very difficult to classify, right? So because it is giving return, that way it should be an asset. But if it is an asset, it's a very bad asset. Okay, so it's up to you. But yeah, you can consider it as an asset under your asset. But really speaking, you should go with pure insurance, and that is an expense. Always remember that. Okay, and this is a non-discretionary expense, right? Discretionary and non-discretionary expense is a non-discretionary expense, because once you commit, then you'll have to pay that, right? You cannot stop it. Param. No influence. Okay. Okay, that's it. That's it from our anything else? There was one more has come, I think. Okay. No. These are the only questions that have been put, and there is one more, but he or Prabhu is not there, right? Prabhu is asking. Okay, Prabhu's questions I have answered. Priya's question I have answered. Govardhan is not there. He has got a very specific questions, like, premiums and all this stuff. So maturity time is 25 years, etc., etc. Okay. So now, yeah. So once Mr. Govardhan come, then we'll discuss this question. Okay. So anybody has any question, then you can ask me. So how you can ask me? You just click that reaction button. Once you click that reaction button, there will be raise hand button. Once you click that raise hand button, your name will come at the top, and then after that we can discuss. Okay. Go ahead. Right. And it's good. Okay, don't take this opportunity. You see, like, we are going slow. Our intakes are less, right? So normally we get 30, 40 people. Okay. Since we are going very slow because of some reasons, we are expanding. Okay. That's why we are going slow. That's why the participants are very low. So that's why take this opportunity. Right. So when there will be, again, we'll start taking more, like, big batches. Then, then it becomes difficult asking question. Okay. So please take this opportunity. Don't miss it. Ask me question. I'll respond. Just a moment. Be ready with your questions. I'm just getting my glass or my water. Okay, just a moment. Yes, guys. Tell me. No question. If there is no question, then I'll be happy. I'll go just have cup of tea and then I'll start reading something. Okay. Yeah. Hi, Mahendra. Nice to see you after such a long time. Yeah, can you unmute yourself? Unmute and switch on your camera.
Good evening,
Yes,
sir.
sir. After a long time.
Yes, sir.
And just a moment. Spotlight for everyone. Okay, let myself also put in the spotlight. Just a moment. Spotlight. Yeah. So, how is going?
Sir, good. Now I was searching for debt funds because my father wanted to invest in some debt funds compared to the FD, as you said in 2nd February session also. Current is the time when it is good to invest in debt market.
Yeah.
But instead of directly investing in debt funds, we have to go through mutual funds.
Yeah, debt mutual funds. Better.
Yeah, because some of the debt funds have put options, like that. But when I searched for long time for long funds, long duration funds, there are no such fund having 5-star rating.
Possible, because that I can still remember. Okay, yeah, that's true. Most probably. So let us search. Okay, let me see. You are a banker, so you know it very well, right? So what is going to happen in the interest rate? You are a banker, am I right?
Yes.
Yes, I can remember. Yeah. So in fact, I had a couple of days back. In fact, I had a long discussion. Just a moment. I'm just sharing. So long discussion with one banker from he's a this thing Axis Bank again, branch manager Axis Bank. So we had a long discussion on this interest rate. Interest rate has been like, it has been revised upward recently, okay, again, right?
Yes, again 0.25.
That is like, that's crazy, crazy. I don't know what will happen. Okay, just a moment. What is that? Value research.
Value research.
Value research somewhere. Date. I think, yeah, I can remember. Yeah, there is no 5-star fund in long duration, right?
Then mid to long,
There are, yeah, I think
there is one.
yeah.
But how long duration that fund is?
They are mid to long is like 5 to 7 years. So that is also fine. 5 to 7 is pretty safe. Actually, we need it for a safety purpose, right? So there should not be more volatility. So that is okay. That's good. Okay, this is like they have this thing. From here also you can choose fund category,
Yes,
fund rating. Okay, there is fund rating. So they are having open-ended and okay. So this is rating. Okay, yeah, we need
category.
yeah, so category,
Category.
right? So from here also you can
There
go debt fund and then
depth.
medium to late. Okay. I think medium to long term is fine. Okay, only one. Okay.
So I took 4-star also. There are 3 4-stars
Okay.
in that.
Okay. So you have done thorough research, right? That's good. Okay. Okay.
Not thorough.
Yeah, but
I have some doubts in that.
okay, so let's say first return part, 6 months, 1 year return. Long-term return, I'll say, right?
Long-term 11.6.
7 and 6. Now it will increase because now since the interest rate is at a higher side, so that's why like it has gone up, gone down. Okay, so interest rate is like has gone up, so fund values have come down, right? So that's why it has like because it is all calculated backward.
Yes.
10 years back. Okay, so it's like that. So once ABS, okay, 7%. So let's see the alphas. ETA bond, a huge alpha. But this
4.84.
is 4.84, but this is like this 0.01 R square. You say R square talks about the consistency of the data. Okay. So higher the R square, so more they will maintain the data. You getting it? Means higher the R square means they are consistent. Okay. Like it's almost like a student. So sometimes he becomes top and then sometimes he fails also, right? So these guys are they have a low R square. High R square means okay, he is probably okay, he always say scores 80%, but he's consistent, 81, 82, 79 kind of. And those low R square means sometimes they will score 100, sometimes they will score 50 also. That's like that. So that way the R square is less, that means consistency is low, but alpha is still high. Risk is average.
In that way, SBI Magnum Fund, I thought it's okay.
This is okay.
Magnum income.
Yeah. So this is like how is the SBI Magnum and ABSL income? Yeah, just a moment. Yeah, SBI Magnum is in fact that is this thing. Yes, SBI Magnum is 4-star. SBI Magnum was 5-star, if I can remember. 1 year back, I believe. Because I can remember when we like in some workshops, I can remember like we chose SBI Magnum. And probably yeah, SBI Magnum was 4-star. I think they have been downgraded because of some reason. I don't know why.
I think ABSL income is also nearly same to it.
Yeah. This is 1 year, no? We'll have to say, of course, we'll have to see
3-4 years, long term.
So age is this much, 10 year, just a moment. Returns, long term. Three years return, 5 years return. Yeah, you see ABSL, SBI Magnum. You see this, can you see that? 3 years return 8.35, 5 years return 4.38. Can you see that? 10-year return 6.6. So now, but the thing is the SBI Magnum comparatively 7.72 and 8. So they are more or less. This is 7.63, 7.8, 5.97, 3 years. So more or less they are consistent. And then SBI Magnum is not bad. 8.23, 8.0. Okay, just a moment. If I look at risk, let me see this sharp issue. No, I think this is fund of fund. Don't go for this. This is FOF. FOF means fund of fund.
Okay.
Fund of fund means it's like me. I am actually what I do. I do fund of fund.
Yes.
Fund means, yeah.
Fund
So I take people's money and then I invest in mutual funds. Same fund of fund. Okay. So they invest in mutual fund. That is not necessary. Okay, it's not nonsense. In fact, I do invest only very specific 1 or 2 funds only. Okay. So that is not. So I think an SBI Magnum is fine. See, like Sharpe ratio is also good. Sortino ratio is also good. Okay, forget this. But otherwise, you can go with SBI Magnum. And as I have told you, so far I can remember. So this was a 5-star fund. I think because of some reason it has been downgraded. But otherwise, it has been quite long. It has been a 5-star fund, if I can remember correctly. Okay, so this is not consistent. UTA bond fund is not consistent. So this is consistent, in fact. Let's see. Minimum investment, expense ratio is not important. Exit load. Okay, so there is one thing.
1%, 365 days.
So exit load is there. So if you think like you'll be consistently 365 days, right? More than 365 days, you'll be investing, then you can go ahead. Doesn't matter.
In that, how UTI bond fund actually got this alpha so high?
Yeah, this is because alpha is so high, because now there you see there is one thing. You see there R square is very less, right? So this is somehow by fluke they did it. Okay.
In equities, we can short the whatever shares.
Yeah.
But what can we do in bonds? Because we are knowing that interest rate was going on increasing in last 1 year. So fund managers were knowing it.
Yeah.
So how can they get benefit out of it?
You see, they cannot do anything. Only thing is that they can now in this case, that's why we need to understand, we need to have this knowledge. That's why the course is okay. Because fund managers cannot do anything, because they will have to this is a UTI bond direct, this is a long duration, medium to long duration, right? So they will have to choose only those bond funds where duration is 5 to 7 years. They cannot invest in anything else. Otherwise, they will be questioned. Getting it? So they have no issue. Only amongst them, because they have in case of bond, it's choices are very limited. Only thing is that what they play with and why this kind of alpha they are getting. Most probably, let us say, most probably they are investing in a lot of personal bonds.
Or one thing might be there, like they sold 20-year bonds and purchased 5-year, 7-year bonds. So
yeah. Oh, kya hua? What happened? What is this? These guys, they keep on changing this thing. Okay, so I think let's give us advertising. UTA bond. Okay. Portfolios, right? Now that also they can do is sensitivity is low. Okay, that is fine. Long-term bond sensitivity will be low, credit quality high. This is okay. Now, that also they cannot do because that will affect their this thing, affect their duration. Because now duration they cannot compromise. You getting it? So duration, because if somebody complains that these guys they are playing with duration, like they will be caught. Like it's a mid cap fund manager cannot invest in large cap. Same way here also. So if they are saying we are medium to long, that means their horizon is 5 years to 5 years and above. 5 years and above. Okay. So because long means 7 plus, 7 or 7 plus. So medium to long means 5 plus above. So now, yeah, they 20 years, they can do that. Okay, what you are saying, okay, I can do that. Okay, they are selling very long 20 years because they are, since they are medium and above, so they can buy 5 years duration also.
Yes.
Yeah, that's what you are saying. You are correct. Yeah, absolutely correct. Yeah.
Percentage of long duration, very long duration bonds might be reduced so that they have got that alpha.
Exactly. That is very, very, very much possible. Now you see, yeah, mainly the government of India securities. This is Bajaj Finance is there, and then they are very small. Indian Railway, Government of India, mainly Kotak Mahindra Bank, HDB Finance, Diwan Housing Finance, Sovereign Bond. I don't know, like how they are generating this alpha. So high alpha, how they are generating.
Duration is not given, or that bond life is not given.
Bond
Maturity
life,
date, etc.
yeah,
So that
32, ये तो है ना, 2032. 2032 means how much? 20, this is 23. So yeah, 7 years. So 7 years is the maturity. 7 years maturity means duration will be somewhere around 6 years or so. 5 to 6 duration will be that much. Okay, so they're all 7.26 is the your coupon. Now here also 27. So now you see 27. So they are not supposed to buy this bond.
which one, sir?
22.
We are not able to see that dates on
Okay, you
screen.
cannot see.
Yes, sir.
Now it is visible.
Left side is cut.
Yeah.
Now we are able to. Now, yes.
Okay. So you see, this is that's what they are doing. Are you getting it?
Okay.
So 23, it's maturing on 27. They should have sold it.
4 year.
So yeah. So it is 4 years. 4 years means like normally it comes to this. If it is 4 years, then it's a duration will be somewhere around 3 or something, 3 point something on. Okay. So in fact, duration is less than 4 years. Most of the time it happens. Most of the time, like whatever is the total tenure, duration becomes normally less than that. Okay. So now this they are not supposed to keep this bond in their portfolio. Okay. So this is the reason why they are getting higher alpha, and probably temporarily they will be showing like a higher return also. Okay. And but the thing is that yeah, so that's why, but it get caught in the R square. So that's why, like when you know that entire thing, they got cut, right? So that's how the research is. Okay, so that triggered, okay, something they are doing. So how I got that sense that they are doing something which is not as per the not legal. I am saying like it's illegal only, but probably it's not tightly within the framework. Okay, so that R square gave me the indication. Okay, something anke panke is there. Now here it is. Now this is, you see, percentage is huge. What is the percentage? 17%, 18%.
Yes.
Getting it? So this is how it is. So 18%, or it's maybe there are 825 wala hai, you see. This is how much? This is 8%. So ऐसे करके तो उन लोगों का, they are actually playing with short term actually. Though it is not actually, you cannot categorize them as actually, really speaking, you cannot categorize them as mid to distinct, mid to long. You cannot categorize them.
Similarly, I have to check with other two also, SBI and that ABSL.
Yeah. But it looks like they are okay because looking at the R square, it looks like they are okay. So they are consistent. So this guy is not consistent.
This turnover percentage, I had asked, I think 2-3 months before. When I last month I checked the quant fund. I hadn't purchased it at that time because it was having Adani shares percentage. First on top, it was Adani Enterprise and Adani Port in top 5 shares
Okay.
at that time. That's why I haven't purchased. But when I looked it last month, then I come to understand they already sold it. That's why their turnover ratio is very high.
Okay. So now,
So
but tell me one thing. Tell me one thing. How did you know this other things was going to happen? You had inside information?
no, this Money Life Foundation, Deepak Basu and Sucheta Dalal, they already had said that.
Okay. 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 Okay.
So
From there you got it. Yeah.
yes, they had already cashed last time also, and I knew they are trustworthy
Yeah, I know that.
because I'm following them from last 10 years. So like that, that's why I haven't purchased at that time, but it gave good return till in last 4 months.
You know, I said that in 2014, April 10, about Adani Enterprise. And it's there in my Facebook wall. Okay. So yeah, so like R square has given me something. Okay, there is something hanky panky, right? So all these like analysts, they like they get an indication. Okay, like, why it is so? So there is something inside. So you get that. Okay.
Actually, looking at it also, any company cannot go this many fold in within 1 or 2 years.
Very simple. It's very simple. Yeah. Okay. So now Quant is doing good. Even like they exited before that Adani things or
Yes,
before that. Okay. So
before that.
intelligent people. So they came to know. Okay. They sold entire thing or still there are some holding or entire thing?
No, Enterprise, Adani Enterprise is not there, but Adani Port, but it is not in top 5.
Okay. So it's insignificant. Okay. So bach gaya.
But I was skeptical at that time. That's why I haven't purchased. So I
Good, good. Okay, you should have told us that point of time only.
I was not sure how this markets goes, and
Unfold going ahead, yeah.
you are more knowledgeable.
Uh, no, in fact, no, you see, it's very difficult, and since nowadays I am not into that, hardcore equity. Okay, so earlier, like I was as an analyst, I was a hardcore into equity, day in day and night. So I used to do only equity, okay, nothing else. No mutual fund, no debt, only equity, focused, right? So that point of time, the orientation was different because now day and night, from morning to evening, all this news, all this analysis used to come, and a lot of information we used to get in advance. But it's not like we are having access, but it comes because we are in the circle. Okay, hey, what's up? This talk, something big coming. So this kind of information, even if like it may not be exact information, but we used to get such kind of information. Okay? Something big is happening in that counter, so please be careful, kind of.
In debt funds, how its return is decided, because for 5 years also it is 8%, whatever debts they are purchasing. For 10 years also it is the same percentage. So when we sell at after 1 year, we get less return percentage wise compared to 3 years or 5 years.
Market price, market price, no?
Price fluctuations.
Price
Okay,
fluctuations.
it is.
Because they used to, it's not like they buy and they keep sitting on that, right? So in fact, really UTI is doing that probably. So they're sitting on it. Okay, let it expire. Okay, they should not do that. They are saying, okay, we are buying suppose 5 duration bond, 5 to 7 duration bond, right? So now when they are buying 5 to 7 duration bond, whenever duration changes, they should get out of it. They should buy like those kind of bonds where the duration matches their objective. Okay, so now how to do that? Like they will have to keep on buying and selling bonds. That's what they do. That's why it keeps on fluctuating, and that's why it is like I'm saying, if you want to take advantage of the fluctuation of the interest rate, mutual fund is the best way. And if you think no, I just want to, because now you can buy a raw bond also. Okay, it doesn't matter. In fact, whether you buy bond, raw bond means not fund exactly bonds, but that also you can buy if you want, because but only thing is that it has that put option thing. When the tomorrow if the market it comes down, interest rate comes down, they will come and they will force you to exit.
That is why we have to.
Yeah. So that's why in a mutual funds that is not there. Okay, so they will manage it. It will be there in mutual fund also, but they will manage it. You will already getting the advantage of buying at a lower price. Lower price means higher interest rate. Okay.
Still currently, like last 10 years or 5 years return is less than 8%. So as a banker or plus senior citizen, he is already getting 1% more. And current interest rate is he is getting near about 8.89.
That's true. But this is happening because now what happens, as I have told you, interest rate has gone up, all the bond price have come down now. So since the bond price have come down, so it has been calculated from today 10 years, right? This is how it is. Now when the bond price, when the interest rate will come down, bond price will go up. So suddenly you will see the return will be, they will show fantastic return. Now what will happen? Now you know it, that's why you are saying, okay, only 8% what you are buying now, okay? So tomorrow it will happen like this, interest rate will come down, price will go up. Now what the normal people will do? They will buy, oh my God, bonds are giving 12% return or 13%, let us buy. Okay, so
at that point of time.
They gone. Okay, they will not realize now. 5-6 years, when they'll say, okay, there is nothing. Because they have already entered, at a very, very high price. So that's why this knowledge will help. Okay, that's why even if you are saying, okay, very small return, still you are buying bonds. Okay, why you are buying bonds? It is giving still return because it has already gone up. That's why it is giving still small returns, right?
I told my father that also because he is already getting 1% more. He is also banker retired, so he is getting 1.5% more. But I told that 20% taxation will be there. So compounding of interest won't be there compared to the mutual funds because every year he has to pay tax on whatever interest he earns. So effective interest rate will be might be 7% only.
7%, yeah.
Because currently 9%, he will be going in 20% bracket, so 1.8. If I reduce, it is already 7%. And I gave him this also that capital appreciation will be there in mutual fund after 2-3 years because till that time interest rate will come some bit down.
It will come down. It will come down very fast. In fact, you see, everybody is frustrated. Frustrated means government side, particularly RBI and government and RBI both, right? So they will a slight indication they get, they will bring it down because nobody wants higher interest rate. Okay, nobody wants higher interest rate because government needs to borrow money, right? So they borrow big time. So government never wants a higher interest, and that is why we are suffering now because they should have increased the interest rate long back. Okay, whenever there is a pressure, immediately they will pressure. They will give pressure to the economy immediately. But what happens, अभी जल्दी जल्दी पैसा ले लो, चाहिए, so let it go up. So now it is almost going out of hand. So that's why consistently and every time. Last time also I said, okay, I don't expect that interest rate will increase, right? Again they have increased the interest rate. Okay, last time also I said there is a couple of months back. So I don't think they will increase the interest rate forever. Still they are compelled to do that. I'm getting it. So so now they are also becoming desperate because somehow if they get a good opportunity, they will bring down the interest rate. This time, how is the budget deficit? I cannot remember. How is the budget deficit? What is the percentage? It's a high or it's low? Did you see that?
No, I haven't checked it also.
In fact, I cannot remember. During that point of time, I was having some other things because in a hurry I read it. So I'll say that. If the interest rate, if the budget deficit is low, then definitely they will, given a chance, they will bring down the interest rate. But if the budget deficit is high, then there is still risk is there. Okay.
They have to reduce then because they are taking more debts from the market. So
yeah,
they can't pay.
Yeah, that is true. That is true. But
So they can't pay that much.
What happens, right? When the deficit is high, then government will have to borrow, right?
Yeah.
When the government will have to borrow, then it will automatically put a upward pressure on the market interest rate. Okay, so because everybody knows, no, the government is going to, government will have to borrow whatever is the interest rate. Okay, so they cannot postpone it. They do postpone it, but not that like private sector. Okay, put off it, like, sack off all the people, close that project. We'll do it. We'll see after 1 year or after 2 years, right? Government cannot do that. Okay, so they will have to come to the market. Okay, so now whenever deficit is high, then RBI becomes very reluctant to reduce the interest rate.
So there is again chance to increase interest rate.
Because that will be natural. That is called, like, crowding out. Okay, crowding out. There is one more crowding out. So it will be like, they will crowd out. Government will crowd out all the players. So they will be borrowing money.
But that will happen, I think, after September only, because they have to reduce interest rate, and if they borrow more, then RBI can't do that.
Yeah, in fact, again, onus is on RBI. Ultimately, government will ask RBI, we need this much of money. So if the RBI doesn't give interest rate, higher interest rate, people will not invest. Why? People will buy bonds. And that is what exactly happened. Like, I think we discussed this thing almost 7 months back, 6-7 months back, or 1 year back. Okay, so there was a huge government issue that was like, it flopped completely. They could not sell it. Okay, so that point of time only I told, if you remember, that they will have to increase interest rate. There is no other way. Because people will not invest. People can see, like, all this, because in the debt market, main advantage is sophistication, unlike share market. In the debt market, all the players, they have only the analyst and the those who are having proper knowledge about economy, they participate. That's why fluctuation is also less, right? So now they can see, like, this is the inflation, this is the deficit, right? How come government is asking, like, giving this many percentage? Nobody will invest. That's what happened, right? So it flopped, completely flopped. 2 issues flopped. Government. Then after that, like, they didn't have. Then they will say, okay, get money. Government will tell RBI, like, we need money. So you'll have to increase the interest rate. So it's a okay. So they'll have to do proper balance. They will have to do.
Then government will go to divestment in other through equities.
Yeah.
The other way, they can't raise debts. Then they have to go for equity.
They'll start selling off. Jo bhi hai becho. Okay.
So they can't force to increase interest rate again.
No. People will die, right? You see. So what will happen? And let me tell you, I have one friend, so who works in, like, big constructions, and then he goes abroad, and he implement projects and all. So there is a project in Australia. He went there, and it is becoming across the world, not only in India, across the world, right? This phenomenon is happening. So he went there. They had the visa, everything, ticket, arrived there. Then after that, they declared, okay, close it. Came back immediately. Now all the money going there, of course, the company paid, but still, like, they are lost, because they found that, it's not possible to it's not financially it is not feasible to continue with the project. So they closed it down. They said, like, we'll see after some time. We'll review it. Okay. So now, such a high interest rate, ultimately, you'll have to put it in your balance sheet, right? Income statement. If you cannot make profit, if your profit goes out in paying interest, then there is no point. So that's what happens, right? That's what happens.
So again, after 9 months, there might be increase in interest rates.
Oh my God! Please don't tell that.
If that, because currently RBI has to reduce for 3-6 months, it might happen. But again, when government starts borrowing from market, then again interest rate has to increase, but it won't be increasing like current.
Yeah, so that's why it is important. Like, why all the analysts, they keep on looking at the deficit. You see, like, normal people, they say, okay, what is the tax benefit, right? So normal people look at that, okay? Whether mobile phone is becoming cheaper or what is becoming cheaper, right? Analysts, they are worried about, like, what is the deficit? What is the deficit and where they're investing? Okay, you see, like, if there is, again, there are beautiful relationship, right? You can see that statistical relationship. There's a deficit, but at the same time, if they are investing more in infrastructure, okay. So now, again, like, there are some capital goods, infrastructure and particularly capital goods. Okay, if the investment in capital goods are more, then you will see, like, that will give you dividend after some years, 1 year, 2 years. Okay, so that's why people think, okay, fine. So there is a deficit, hum log seh lenge. Okay, so we'll tolerate it for 1 year or 2 years, but eventually going ahead, this infrastructure and capital goods investment will give dividend. Okay, so that's why, like, an analyst, they are very simple. Analysts look at these three things only. They will look at what is the deficit. Okay, the deficit is okay, fine. There's a high deficit. Oh my God, it's a bad thing, but that's okay if they are investing more in infrastructure and capital goods. Okay, capital creation, that is okay. Okay, it's okay, fine. We'll take pain for some time, but future will be good. But they are doing it for subsidizing, giving free stuff, right? Okay, that money is never going to come back. That is not going to compound. So these things, like a simple things, it's not very hi-fi thing. It's a very simple logical things.
In
I'll have
that
to see
sense
the budget
also,
again. I'll have to see the budget again.
I also think same.
Yeah.
Because in that sense, we have to look budget again.
Yeah. So we need to see that again. So then you'll get a proper idea. Okay. So now crowding out will not happen. If there is an infrastructure increase, capital goods investment, that crowding out that we are discussing, that government will come and, like, they will crowd out everybody, only they will borrow. That will happen less, because what happens? Economy will be vibrant. Money will be there everywhere. When the money is easily available everywhere, then interest rate comes down. Okay. So you have also money, I have also money, somebody needs money. Okay, fine. Okay, give me, okay, 1%, 2%. Okay, give me, take money. It's just lying idle. When the money becomes scarce, income is not there. Like, nobody wants to, like, nobody wants to land. So they want to keep themselves. Or, like, people will say, like, I have no income. Like, you have to give me higher interest. I have only this much of money. So this is what happens. So interesting. It's a very interesting, easy, but it's not that difficult. It's easy. It's a common sense only, fully common sense.
Thank you, sir. Your equity classes we are waiting for.
Oh yeah. Okay, right, yeah. Yeah, today also, like, Poonam told me, Utpal da, what are you doing? I guess he calls me da. Okay, Utpal da, you're supposed to do that. Like, yeah, I'm supposed to do that. So we'll do it. We'll do it soon, right? Few things are, like, I'm struggling with few things. Like, these are not being sorted out. Okay, actually, we are, let me tell you, we are launching some courses abroad. Okay. So now this is not happening. So you're spending money, but this is not happening. So I'm really stressed with that. So once that is being sorted out, then everything will be, because these are this one course, and there is one course abroad, and then there is another course on leadership. Okay, that is for charity purpose. Okay, I don't make any money there. In fact, whatever I spend a lot of money to do that course. Okay, so that's I'm doing for charity purpose only. So these three courses only will be there. So now I have this course. Of course, equity will be under this course only, like, but basically these are the main 3 lines. So since once that my international course starts, then I'll be relieved. Then after that, definitely I'll start this course. This course will be part of this only, because I don't think, like, I'll take any student from outside. As of now, I have no plan, because then I'll have to train them quite a lot, because now you guys are expert. Okay, you are almost like analyst. So it is easy to make you understand those things. Okay, others will not understand anything. Okay,
After your course, we will become analysts.
Oh, thank you. Okay. Thank you so much.
Thank you, sir. Thank you very much.
Okay. Avijit Chakraborty. Avijit Chakraborty.
Yes, sir.
Yes, sir. After a long time.
Yeah, almost 2 months.
Yes, 2 months is a long time, right?
Yes,
For equity market, it's a very long time.
That's
I can
correct.
still remember when I was there, like, because we are analysts. Okay, when we are a fundamental analyst, right? So when we are, I was fundamental analyst. So normally we project for 5 years and 10 years like that, okay? And then there are other kind of analysts who are technical analysts. Technical analysts, they look at the market daily. So
Yes.
whenever I ask them, like, what do you think, that they used to ask is, what do you think? The long term, this will happen. So long term means, so they used to ask me, the long term means, we means years.
Oh,
3 years,
yeah.
5 years, okay?
Yes, yes.
So now
Correct.
this technical analysts, they used to ask us, अच्छा long term का मतलब क्या है तेरा कितना 2 हफ्ता 3 हफ्ता means क्या है, okay? So long term, short term is very relative. Yeah, please, sir.
So last time we chose two funds actually when we had a one-on-one. One is Quant Focus Direct, another is Aditya Birla Midterm. So I started investing in Quant Focus immediately after our session, 2 installment I did. But I don't see that much of, actually it is, initially it went up. Now it is after 2 installments, some 1 or 2,000 minus. So it is still a good fund to invest. That was first question.
We will see it. Okay, we'll see.
Okay.
Okay, let us see how to see it. We'll see it as per our SOP only. Okay.
Okay.
So now let us see that. Okay. Nifty P ratio, right?
Yeah, that is 21 point something.
21 point something. No? So we will. Okay. So this is here. So you have invested in
January.
January,
Yeah,
right? Large cap
huh.
only. So we are in large cap zone only. So you don't have to do anything.
Okay.
Okay. Because 20, we invest in large cap. If it comes below this, then we can switch to don't worry. Like, it's a good thing. Even if, like, you are seeing, like, just now we have discussed about the bond fund, same. And if you see, like, your profit is coming down, but it's a good thing. Good thing. Why it is good thing? If it comes down further, then you'll be able to invest in mid cap. Okay.
Okay.
When you will invest in mid cap, when it will turn around, to hona hi hai, right? When it will turn around, you will make much more money. Okay. But as of now, you don't have to. ये तो ऊपर ही आ गया ना, so it is ऊपर ही है now. Right, just a moment. Yeah, it has come down already, right? So like, I know, like, I have a client, he got panic. Sir, it has touched 21, sir, please. No, don't worry. Okay, so let's see. And it is a good thing that you are losing money. It's a good, okay, because we'll get an opportunity to buy more aggressive fund. Okay, so now it is here. Okay, still it has already come up, so you don't have to do anything. In fact, stick to it.
We have breakup till 23.5, right? Till then we can be in this fund.
Yes. In fact, if you feel like you will remain aggressive even after 23, also you can continue. But there is a risk. Risk is like, if it comes down, it will again become 0. So in that case, you can shift to index fund at 23. I think like I'll play like properly. Okay. If you think no, I'm going to take the risk, but I need higher return, then you can continue with the large cap, because if the large cap comes to here, it will give you huge return. But if the index comes from here to here, it will give like only that points only.
Okay.
As we have covered it in our workshop, you understand it.
Yes.
Don't worry now.
Okay, so Quant was still good, so I will continue to invest. Second one was Aditya Birla Sun Life Midterm Plan. Now this one I have not invested that time because my money was with one of the mutual fund which I did, and because market went down, my my interest rate also went down. Not interest rate, internal return, IRR also came down. So I was waiting to it come little bit up and then I will invest. Now I'm planning to withdraw tomorrow or Monday. That is, I decided. Now it is came little up. Now my question is, Bandhan Bank is also giving 8.5% senior citizen. So by I can invest in my father name. That is one option. Another is if you can still look at to this fund again today and tell me this is still good. Aditya Birla Sun Life Midterm Plan.
Okay, just a moment.
Yeah.
Debt fund, no?
Yeah, mid fund. 5-star fund it was, I remember.
Yes, no?
This,
This one, like, you say, like, this is now, okay, now tell me what was your question?
Yeah, so now I want to invest my full, so I have some 10 lakhs which I want to invest now. So this money would it be good to invest here? I heard, and I also got a call from Bandhan Bank. They are giving 8.5%. So I want to invest for a long term now. So they are minimum 2 to 5 years at least. So which would be better option? Or is something better than this mid-term is available now? Because now I'm going to get the money, so just to verify where can I put.
Okay, so now tell me one thing, for what is your investment duration?
Yeah, somewhere 5 to 7.
5 years, okay, 5 years, okay.
Hmm.
Now this Bandhan Bank is giving fixed deposit rate, right?
Fixed deposit,
They will
8.5.
deduct taxes, so you would look at the tax.
Yeah, my father will not have the
Tax, right?
10%, that's it, yeah.
Okay, so now, so that is gone. So now for 5 years, if you want to invest, now you see 5 years, now what is the return this is giving? ABSL is also having 8.6, but now
Yeah, 8.6.
more in fact, okay.
And
So
then 10% capital gain tax I have to give, right? That's it.
capital gain tax you'll have to pay.
Yeah.
Okay, so that is there. So now
3 years more it is giving more.
because now since it is giving 8.59 now, now interest rate is very high, right?
Yeah.
Okay. So that means your fund value is less. Even after that, it is giving 8.59. So now going ahead, when it will be interest rate will go down. Okay. After 5 years, definitely it will go down. Otherwise, will be vikari. Okay, India will be like in a very bad condition, right? So, I don't think like will be like such kind of situation, right? So in that case, like your return will be higher actually, much higher.
Okay.
But only thing is that okay, here you'll have to give capital gain tax, and it will be adjusted for tax for inflation. Okay. So now official inflation, what is the official inflation rate right now? Just
4 something or 5.
current inflation rate, inflation as per income tax department, income tax data. Department data. So they have given index only.
Yeah.
Okay. What is the inflation rate? Current inflation rate. 6.5%. Okay. So up to 6.5%. Now let's like 6.5%. Okay. So up to 6.5%, you don't have to pay anything. Above 6.5% means 6.5% means 6.5% and 8%, even if you're getting 8%. So like this 6.5%, then every year they calculate it. Okay, that way. So 6.5%, then your how much it will be? Only 2%. On 2%, 2 to 3% you'll have to pay 20%. Okay, that means 0.04% or something.
Okay.
0.04%. So it's a very minimal you'll have to pay as capital gain tax. Okay. So now let me tell you one thing. So there is a trade-off. One thing is that here you can get more return. Okay, but there is a risk of fluctuation. So there is a we can get more return. But in case of fixed deposit, okay, it's fixed.
Fixed.
Okay. So now this is how it is, right? So they are like it's 8%. They are saying they will give invariably 8%, and then if there is no taxation, so you'll get that 8%.
Yes, that's correct. Yeah. Okay.
And if you think you'll be investing for longer period of time.
Minimum, 5 years at least.
Minimum at least 5 years, right? So now if there is a possibility that it will go longer, then I think you can go with this thing. We can go with this fund.
Okay.
Because why? Because after 5 years, okay, they will revise it again. So now you can fix it for 5 years. After
Yes.
5 years, they will revise it. Definitely, they will have to revise. Okay, otherwise, like a bank will be in a very bad situation.
Yeah, no, this 8.5 they are giving for 600 days of deposit. So if I am depositing now, it is for less than almost 2 years. They will return 8.5. That is the and because my father does not fall under that bracket, 7 lakhs, which is new regime has come up. So the money will be completely will be given. I mean, without tax. That is one
After
thing.
2 years. After 2 years.
After 2 years, yes.
Okay, so then after that they will fix that new rate. You will not get that consistent this much rate.
Those, for example, if I am booking the fixed deposit today, will not be applicable for the tenure till the time
It
this
will be
is
applicable for a tenure.
exactly. That is
It will
what
be
is
applicable for a tenure. If they are saying
Yes.
it's a 5 years deposit, 6 years deposit, so for that entire regime they will have to pay that much.
Exactly. So this is now they are saying for 600 days, 8.5 is a good. Only the name is Bandhan Bank, so because it's not that I mean reputed in you can hard yeah, that is correct. But there is no other way
You
they
see,
can
Bandhan
attract
Bank
customers.
yeah, otherwise you see Bandhan Bank, only thing is that they had some financial problems, but otherwise you see this guy is very respected guy.
Okay.
Yeah, this what is his name? I forgot that name, right? The main guy. So he's a very respectable guy. He's from Kolkata, I believe.
Okay.
Kolkata or somewhere near Kolkata only. Okay. So he's a very respectable guy. Okay. But only thing is that respect is something else, and his intentions are good. He's really good guy. Okay. So but the thing is that since it is a new bank and they started new, so so they have some financial problems are there. That's for sure. But otherwise, that guy is very good. He will not do any hanky-panky. That's for sure. Okay. Because this is very important. Wherever you are investing, the value system and culture of the main guy is very important. Always remember that. So that way you don't have to, I don't think you'll have to be worried much. But the thing is that you'll have to see that the fluctuation point of view. Here it is fixed, here it will be fluctuation, but there is all the possibilities you may get higher return if you invest in mutual fund.
Correct. So one just additional question to that. So even when I'm selecting this, I was actually about to invest this Aditya Birla last month itself, but I was getting two options while selecting. One is reinvest the interest, another is the payout. So I was not getting any option for midterm to reinvest. They will pay at the I mean there is a dividend or bonus, I think what they're calling, they will pay out ICW they are mentioning, I think ICW or IDW, something like that.
IDW or as I cannot, so that they will distribute this thing, capital or some distribution. Okay, I cannot remember. Okay,
exactly. So that is the reason I was hesitant.
They will give dividend.
I wanted money to be actually accumulated and get the compound benefit, but option was not there. I mean, they will anyway pay that money end of the year. That was the reason I was just holding, and I thought let the
same
money
thing will
come.
happen in fixed deposit also. They will give the interest.
Yeah, so I'll put it like see after 600 days only, right? They will not.
No. And every year they will give. Every year they will.
Year.
Yeah, they will give the interest. They will give the interest and they will deduct the this thing. But of course, you have an option.
Exactly. I do have option to change the maturity instruction that I don't want interest. You reinvest it. Reinvest it. Yeah. This point I wanted to clarify because this is a common issue I was facing for selecting in mutual fund. 2, 3, 4 types are coming. I think finally I found 2 types where they are paying out, and another case they are reinvesting the amount. So I think reinvesting is the best option, right? There.
If you do not need money, again, it is always better, you let it compound.
Okay. And this Aditya Birla, I can go for 5 years, right? There is nothing wrong with that. It's a good 5-star fund, and it seems to be
5-star fund, beautiful return.
Yeah.
Okay, let us see that their consistency. So this is important. Just a moment.
Yeah.
Aditya Birla, right? beautiful alpha, beta, sharp shorting standard deviation. That's a R square need here. I think I will go to the
R square
R square is low.
0.03.
Low R square means they are not very like there it can go like this data are not that much reliable
Okay.
over a long part, long time, long.
Alpha is good, but the R square is very less, right?
R square gives that the how much reliable like I gave this example. There is one student, sometimes he hits 100% and sometimes he doesn't read, doesn't study. In one exam he fails, right? So that he has 4 R square. One guy is there, okay, he always gets say 80%, 80%, 80%, plus minus plus minus, okay? He is having good R square. Okay. So now, for example, these are this is having a very good R square. 80% is considered to be the best. Actually, okay, no.
Barodra, BNP, Paranivas, medium duration.
So even if he can be okay, it is not necessary he will be good.
Okay.
He might be a failure, but he every time he fails. It is not that. Don't get confused. Okay, R square gives stability. He can be very good, stable, very good. Always scores 80%. He is also having R square, high R square. Something he always fails. He will also having very high R square. That means whatever he does consistently.
Okay, so we need to see the combination of alpha and then R square both.
R square, yeah.
Okay,
so
I see.
Here alpha is very high, but R square is less. That means it is not necessary that they will be able to maintain this alpha.
Yeah, correct.
Okay, so going forward, it can do like it can come down also. Okay.
Okay. Any other fund in this list we can look at?
Okay,
which is
so one I will see 180. Let us see only 5-star, 5-star or 4-star. So this is the only 5-star. And then we have this. Okay. So here control. This Axis strategic bond. These two are also good. This way, like from looking from everything, this looks good.
Axis strategy bond fund.
This looks good.
Moderate one night alpha.
It's very consistent. Like it will not surprise you. So it will give you okay Axis strategic bond direct, right?
Just check its return.
Yeah, see the returns. Long-term returns. So now it is 8.59. That's not bad. 10 years return. Okay, 5 years return 7.37. So it is not bad. Okay, so it is considered. Can you see that? 13.4, 8.5, 9.55. Okay, it can go like if you look at short term, you also see there is a short term also. Now here suddenly it has gone up. You see, like sometimes it can happen because it's going up also. You're getting it? Not necessarily it will go down.
Yeah, 3 to 21. Okay, it is.
This is 3 to huge. Why it is happening? And because of this, you are getting R square is less. Consistency is not there. Can you say that? So here they have consistency. It has consistency. But here it is not.
Yes. Sequentially, it is.
That we need to look at. In fact, we need to go into details. Why it is happening? Okay, but this is very stable. This looks pretty good, decent. Axis strategic bond. Okay, 8.59, and then R square was pretty good, consistent. But this, I don't know why this is happening. Okay, just let us look at this. Portfolio देखते हैं इसमें किधर किधर लगाया. I think we saw this like earlier also. This is same. I think it was the same bond, right? ABSL.
ABSM we see. We are just looking
Yes.
at currently Axis one, right? Axis.
Axis one, yeah.
Yeah,
Axis
Axis.
is stable. Yeah, I think
Axis
Axis
strategic
one is
bonds.
stable.
Yeah, Axis strategic bonds. Yeah. Right.
What happened? Axis only have seen, right? Yeah, Axis. So we'll have to see the portfolio. Sorry. $27, 20%. They're also doing the same thing. 23, only 4 years. So 4 is okay. It's a mid duration, right?
Mm-hmm.
That's why. Okay, that's fine. Okay, mid duration. So 4 years, 4 years, right? 23, 4 years. 4 years means, yeah, duration will be around 3 point something. So that's okay. Okay.
That's fine.
That's fine. I think, very good. No, government value sectors results also 7.26%. Baki the body come, but these are very small, right?
1.1.4.
We can go with this. Even though it is 4%. Like now, that's why you see, when first I said, always go with 5-star. Okay. So now you have more knowledge, right? Since now you have more knowledge, you are advanced. You can see beyond stars. Now you yourself is becoming an analyst. Okay. So that's the knowledge is, right?
Yes.
That's the
Okay.
main.
Okay, this helped me. Okay, fine. Okay.
You see, this earlier one was you see ABSL. ABSL is good, but there is consistency nahi hai. Sometimes you get such kind of employees also, right, under you.
Yes,
Sometimes when they work very hard, and after that, is behave very erratically. Okay, finding very difficult to control him. I'm pretty sure those who are working, right? ये मिलता है ना ऐसा नीचे जो होता
ऐसा
है
है बिल्कुल हाँ
so this ABSL is like that in fact. So it's very good, but suddenly it might surprise. That's the main. Otherwise, it's looking very good. 13% return 3 years ago. Bond fund giving 13% return. I don't know what they're doing. Bond fund giving 13% return means what they're doing.
They had some other Adani stocks, right? Maybe those have swapped.
Well, they're born, right? They cannot buy others. Something they must have done. Okay. So we'll look at the history, how it happened suddenly. This is very unnatural, right? 13% return. Can you think of bond fund? Kidhar invest karega? Right? Anyway, so I think this is Axis strategic bond. This looks pretty consistent, predictable, and this will you can rely on it. This can give you anything. Okay, so it's unpredictable.
Okay, sir. I got my points. Thank you.
Okay. Everything is fine otherwise, right? Plan is fine.
Yes. Everything is fine.
Okay. So now you have made out what will you do with your money?
Yes. Some invested, some are yet to. I was just holding maybe clarified today, so I'll invest Monday. Okay. And I am also looking for your stock course whenever it will start. So
let's see,
Yeah.
I think he will send the signal. Okay, so we'll start it soon. Everything is ready. Only thing is that because of this, some stress is there at my part, so that's why it is not happening. And then I'll after that it will be a slightly longer and live course.
Okay.
Because otherwise as a video Udemy maybe anybody can go.
वो तो
Udemy.
Random videos बहुत सारे हैं.
बहुत सारे everywhere it is. All right. Okay then. Okay.
Thank you.
Okay. Anybody has any question? Abhijit Chaudhary, yes. Chandrasekhar Ghosh, yes. Very respectable guy. Chandrasekhar Ghosh is the founder of Bandhan Bank. Earlier it was Bandhan small this thing, what is called microfinance, right? So very respectable man. He worked a lot for this poor people. So yeah, so he helped them. Okay, it is almost like Bangladesh ka that guy, same way. So anybody has any question? If you have no question, then okay, here is somebody. Yes. Again, Mahendra.
Again.
Yes. Please come now. Nobody is there, so don't worry.
Now again, I thought like that medium term versus medium to long mutual funds. What will be the difference? Because in medium also we got 1 5-star.
Okay.
rating.
So now you see medium, lesser is the duration, higher will be the fluctuation. Okay. So now I asked this question. If you remember in the exactly this question I asked in the workshop. So you know that interest rate will come down. You will buy long duration bond or you will buy short duration bond.
Currently, short duration is more lucrative than. So likewise, more going to medium to long. I will go for medium only then.
But you'll have to be careful because when the interest rate will reverse, then this will be like so then you'll have to really exit it.
For 1 year, it won't be much fluctuating in negative ways. That means interest rate won't increase.
Yes. Yeah, that is true. Yes, of course. Once they come and bring it down, then I don't think they will increase it. Okay. So you know the answer yourself. You know the answer yourself.
So currently investing in medium term mutual funds is more beneficial then.
Definitely, obviously, it will give you more return compared to longer because interest rate has a peak, and that is the exact question I asked in the workshop. What will you do? Like if the interest rate is very high, now you need to exit to the debt fund. So what kind of fund will you buy? So that's now today this is relevant. That point of time it was hypothetical situation.
Yeah.
Today it is the real situation, and you know what to do. That's the beauty.
But again, reinvestment risk will be there.
Reinvestment risk
will be with mutual funds.
So after that, once it comes down, then after that, if the interest rate goes up again, okay, it will take time. Okay, minimum 5 years it will take. Okay, so I believe if the government doesn't do hanky-panky with economy, okay, much, then it will not go up again like this. It will take time. So you will get, at least I am pretty sure you will get at least 3 years. So 3 years, 3 years you're done because you'll get capital gain with indexation benefit. And another benefit, as I have already told you, there are 2 benefits when you invest in the when the interest rate is high. First thing is that the bond prices are very low. Okay, so you'll get this benefit. And second, indexation benefit you'll get because now interest rate is high. Inflation is high. That's why interest rate is high. Okay, so this higher indexation benefits will go. Suppose 6%, as I have said, 6% is the inflation. So immediately 6% will be deducted. Whatever return you are getting, so 6% will be deducted. So they have that they have that method of calculation. So they keep the index. Okay. So now this will be when they will publish the index, like everything will be taken care of. So you'll get that benefit also.
Okay. Okay. Thank you, sir.
Okay, welcome. Okay, any question? Anybody has any question? Someone, sir, kindly say brief and say SOP of manpower. Okay, Shamukton, can you distinct switch on your camera and this one mic?
Sir, I'll just put on the audio, sir.
Okay, okay, no issue. Yeah, so you are asking SOP of mutual fund.
Yes, sir.
Okay. SOP of mutual fund, you will give me 8 hours. So your this workshop is coming. You have joined workshop, am I right?
Yeah, yet to attend the workshop, sir.
And yeah, so this workshop, you are going to learn it. Okay.
Okay.
Because this will take time. Now, all these guys, they have already done the workshop. They have completed the videos. So now they can immediately understand. Okay. But to make you understand, so you'll have to, once you attend the workshop, or you can complete it. But workshop is better because in workshop, we have gone to deep and we have I have given you this is the SOP. Okay. So we'll get that. Okay.
Okay, sir.
It's very simple, but you'll get it in the workshop because it will take some time to understand it. Okay, properly.
Okay, sir.
Okay. So now
Yeah.
second is that I have gone through the 3F and bonus, but couldn't find about the SOP. I'm yet to invest in this one. Okay. Okay. So you don't worry. Because you see, is SOP you'll have to go through that, you'll have to understand, and this SOP, you see, it is simply I cannot give you, then it will be of no use to you. So you will just memorize it. Okay. So when you will memorize it, then you'll find it very difficult to practically implement it. Now you see, today we have spoken to this both these gentlemen. So now you see they can immediately understand in these situations what to do. Okay. So because they have not memorized, they have understood it. Okay. So to understand workshop is the best. Please attend this workshop this month. After that, it will be crystal clear. Then after that, we'll talk further. Then you will understand it properly. Understood?
Okay, sir. Thank you, sir.
Okay, welcome. Prasant sir, when is the next workshop schedule? Prasant, next workshop is next workshop is 23rd and 25th. 23rd is the Thursday, and 25th is the Saturday. Okay, so this is the fourth Saturday. Yeah, first, second, third, fourth. Yeah, this is the fourth Saturday. We try to keep it on fourth Saturday, such that all those who are having fourth Saturday holiday, at least they can. Sunday, nobody is interested in learning. That is what our experience is. Earlier, it used to happen on Saturday and Sunday used to be a big headache for me. Because most of the time I do not know whether people are there or not. No response, nothing. People are busy with family. Okay. Restaurant, attending the session. So that's why please note down 23rd and 25th, 6 to 10. It can go up to 10:30, 11 also, but 6 to 10, both the days. Okay. But batch size is small, so I think we'll be able to finish it beautifully by 6 to 10. Okay?
6 to 10 is in 6 in the evening, right, sir?
Evening, of course.
Yeah.
Sir.
Okay, thank you, sir.
Okay.
So for that, do we need to register it or just directly?
So there's a
nothing?
in that
Link.
a link, and
Okay.
if in case in that link there is a registration, or it's not, it doesn't
Okay.
matter. Okay, you can register.
Okay.
There's a
Thank you.
simple Zoom registration. Okay.
Okay.
Otherwise, you don't have to do anything. You just go to the website. So you'll see
Okay.
workshop. Click there, and then you'll be inside Zoom. Inside
Okay.
Zoom or whatever. Normally we use Zoom, but if something happens with the Zoom, there can be something else. But you will get the link there itself. You don't have to go anywhere else.
Okay. Okay. Thank you.
Okay, welcome. Okay, Abhijit, sir, can we invest in mid-cap fund now? Abhijit, right now, I don't think so, because you have done the workshop or you have completed the course, Abhijit?
Hello.
Yeah.
Sir, actually, I just newly joined. I just completed your course, video course only.
Okay.
Yeah,
Okay.
yet to.
That's big. Congratulations. Very few people are there. There are a lot of people who do workshop, but very few people are there who complete the video courses. Let me tell you the truth.
No, sir, I completed and two times I already revised also.
Oh, that's awesome.
Okay, and but I just think that can I actually I'm working in on finance company.
Okay. Can you switch on your camera? Possible?
Yes, sir. Yes.
Yeah, please do. Such that. Okay,
Visible, sir?
yeah. Let me take you in. Okay. Oh, it's a pretty young. That's great. Okay, so how did you find the course?
My age is 40. 40 plus.
Oh, you look pretty young. Huh? That's great. So that's how did you find the course, and what is
I
it?
see your actually one ad in YouTube. Through that I actually entered this course. And now the last 2 weeks before I purchased it, and now actually I very much know about how you actually decide the fund. Actually, I invested in mutual fund long time, last 5 to 6 years, but blindly I invested. I don't know any process or nothing. I just discussed with my friends and investing like that, but still now don't get any good return also, lump sum returns like that. And normally I do SIP, Normally, I invest only mid cap funds only, not going any debt fund or any small cap funds, large cap also. But I don't know it is right or wrong. But I purchase one multi cap fund also, something excess multi caps. I see return is very bad. Multi caps, 1.5 something the return they give, and I don't know long term what happened.
So you have cleaned up everything, cleaned up your portfolio now.
Clean up means I just continue the SIP, but I waiting for your next after workshop. I decide what to do.
Yes, beautiful.
All right.
Yeah. So now you already know it, but in workshop it will be very crystal clear. Okay, what to do, what
But
exactly.
after you're doing the course, I understand one thing that if equity we keep the fund for the long term, now long term is 5 years or 10 years like that, then it maybe I get the good return. In short term, we thinking 2 years or 3 years, good return is come. It is not happen. Is it right? Is it my understanding is right?
Partially right, partially wrong. Okay. You see, one thing is your entry point is very important. Okay. When you enter equity market and then the valuation is very high, then it becomes very difficult. Like, for example, I showed during my master class, right? Again, when you do workshop, you'll understand in a very beautiful way, right? So during all this peak period, and people do not understand what is peak, what is not peak. Okay, that's why we have SOP.
Yes.
Okay. Since people do not understand what is peak, what is not peak, and always when the market is peak, adrenaline works, right? So people think they will be continuously making humongous return, okay? And you will see, if you look at the chart, then you will see those people, even for 5 years, 7 years, people make zero return or negative return, okay? Now, 5 years they have lost. Again, we are going to discuss this on workshop, don't worry, okay? So you'll see when a 5 years lost with negative return, okay? After that, even for next 5 years, how much return will you make? Okay. Now, for a lot of people, your entire productive or entire this main period where you should make money from investment, that's already gone. You're getting it? Suppose 150 guy, he becomes 60. Okay, with piddly return. Or even an 40 guy, he becomes 50. Or still there is another 10 years for these guys. Okay. So there are I should not complicate it right now that much, but this is what happens. Two factors actually. Okay, since you are asking, okay, let me tell you. There are two factors that work for equity returns. One is sentiment and another is the fundamental. Fundamental is the how much actual profit the company is making. Okay. So that benefit you will get. But that benefit is either it is suppressed or it is exaggerated by sentiment. For that sentiment, we look at Nifty P. Now, what we are doing in this course we are saying you invest in mutual fund. Okay. What kind of mutual fund? 5-star fund. Okay. That means these funds, they are managed well by the fund manager. So they are taking care of all the company fundamentals, profits, good management, etc., etc. But they do not take care of the sentiment. Sentiment we have to take care of. How we do that? By following SOP. Okay. Nifty PE SOP we follow. Okay. So we are taking, first we are making sure that the fundamental is good. Okay. That is coming from the 5-star rating. Okay. Not necessarily today we have seen there are 4-star funds are better. Okay. But that knowledge, for that knowledge, you'll have to wait a little bit. You'll have to keep coming here. Okay. So you'll get that knowledge. Okay. So now this is one, and second is the sentiment. These two factors. So when you are saying that if you invest and keep long, equity will give good return, yes, it is because of the fundamental factor. But if the sentimental factor, that is the PE factor, okay, that's the sentimental factor. If you cannot take care of that properly, then even if it's a very good company, but because of the sentimental factor, you may not get a very good return. Understood? Did I make sense? Okay.
Yes, but I need the experience. What you actually are telling. But yes.
Yeah. Got it. And now
sentimental is a very to take purchase some wrong fund.
Yeah. So please clean up.
Yes.
Okay. If you do not clean up, it will drag down all your hard.
Clean up means what you tell. I can sell that fund that you tell. Clean up means what?
Yes, sell.
Selling.
Sell.
Okay.
Sell it, invest that money, and everybody does that. After joining this course, Everybody
Ah.
does that. Because janbujh ke, like you are working so hard and giving the money somebody who is like he's getting his salary, he's getting bonuses, he's doing everything, playing
Yes.
with your money, not giving you return. No point.
Yes. Sir, multi-cap fund, actually what they actually doing, I don't understand why they doing like that. Now a good market right now. Why they get very bad return they given. Multi-cap, the flexi-cap, this kind of fund, hodgepodge fund.
Yes. So I don't know. They do not have, I think, proper SOP. They should,
Okay.
earlier I used to give them consultancy, right? Nowadays I don't. So yeah, so they do not have consultancy. And you see, they have a pressure to perform in the short term. Okay,
Yes.
that pressure is there because you see, all the people who do not have, what kind of funds are sold most? Where the commission is high. Okay, where the commission is high, and you have seen, there is only one 5-star fund. All others are non-rated in one category. You have seen it, right? If you're here,
Yes.
right?
Yes.
All these non-star, okay, so they are not giving any category, right? So they are non-rated. All these non-rated funds, some of them you will see there are thousands of crores. How? Because they use commission. Okay, so they are sold.
They collect huge amount.
And most of them are non-rated.
Yes.
Most of them are non-rated. Okay, that's why I showed you in the master class, right? And all this is very easy. All the journalists, what they have done, they have just gone there. They've seen what are the stars, seen the returns, and seen the benchmark return. Okay, same in the valueresearchonline.com. Counted it, and they found that 90% is non-performer. You can see yourself. Understood? Now you have knowledge, you can see yourself. Right? So 90% are non-performer. So there's no point wasting your money, hard-earned money. Get rid of it. Okay, and attend the workshop. You have taken workshop, am I right?
Yes, sir. I'm taken.
Yeah, please do attend the workshop. Then after that, it will be complete clear, crystal clear.
Thank you, sir. Thank you.
Okay, welcome. Okay, anybody else? I missed today's session. Will I get a recording of today's session? Yes, Sham, you'll get the recording. If there is no technical flaws, so yeah, you'll get the recording. No problem. Okay, normally we do record and we do this thing. If there is no technical problem. Anybody has any question? You see, all these new guys, those who are, how many of you are new for the first time? You are attending first time or second time? First time particularly. Anybody first timer? So there are two guys who are there who are first timer. Can I type just I? Those who are first timer. Okay, Abhijit is okay. First timer, you are Abhijit first timer. But Abhijit is first timer, but you have completed the course. Okay, that's great. Okay, Luzvi is first timer. Girish, okay, there are few guys. Okay, now you see all these guys don't feel alienated. Now you must have that feeling. अरे ये तो बहुत बड़ा बात है मेरे को समझ में नहीं आ रहा है right? You must be thinking that way. Okay, don't worry. Everybody was in the same wherever you are today. It's and everybody were in that same platform. They didn't have any understanding what is happening, what I am talking, no clue, right? Everybody came here. 99% people were like that only. Okay, be inspired. That tomorrow and today, all these guys that you are seeing today. 1 year back, they were not there. 1 year back, there were some other experts. Okay. Now that these guys, they have become an expert today, they can talk like analysts. And that's what I promised you, right? So you will see people who talk like analysts. Okay. So tomorrow you are going to talk like analyst. Okay. Here itself. And all these guys today, they are talking like analysts, they will stop coming. Okay. They will be no longer needing my help. So they will be expert themselves. Okay. So now be inspired, complete the course, do not miss the workshop. And my request again, if anybody is there who have not taken workshop, okay, you will get at the most probably at the same price or minor 500 rupees or something penalty, most probably take that workshop. That will create a huge difference in your knowledge. Okay, if anybody is there. And also please join the Telegram group. If anybody is there who has not joined the Telegram group, please join the Telegram group. There's a lot of information, but there are sometimes some wrong informations are also there. So please do not do that because yeah, so Okay, maintain that sanity, maintain that hygiene, group hygiene. Okay, so don't post hanky-panky things in the group, okay, such that everybody feel good, like, participating and then visiting that group. Okay, please maintain that. Okay. Mahendra, actually last session 9 February didn't happen. I was waiting here for 4 minutes. Everybody was thinking, okay, after 10 minutes I will join. Okay, so 4 or 5 minutes I was only guy, right? Then after that I exited, right? Because that's what happened. Okay, later a lot of people asked, like, where is the workshop? But I was really waiting here like this, like an idiot. Nobody was there. I was alone. So anyway, in fact, there is actually really, let me tell you, like, there are some technical problems. Like, we had some problem with the network, and then, like, that sometimes it happens. Like, we put the things in a WhatsApp, but it doesn't go. Okay, you see, like, it has gone, but actually it doesn't reach that side. Okay, this similar problems happen. Okay, so we failed to provide the reminders. That is the issue, actually. So today's sessions you will get. Okay, guys. No question, I believe. Or if you have a question, anybody has a question, raise your hand, come. You can ask me in Hindi, English, any language. And if you have no question, then I'll shut it down. No question? Okay. So see you next Thursday. Next Thursday will be 16th. Also, next Thursday will be our workshop day, right? Today is 16. Yeah, next Thursday will be workshop day. Oh. Next Thursday will be workshop day. It will be from 6. You will get the notification in the group, don't worry. It will be from 6. And my special request, please join on time. Otherwise, you will not understand anything. Let me tell you. Because everything is like, it's linked. One concept, then that concept is clear, the next concept, that concept is clear, the next concept. Okay. And it's a fun. You will not realize that you'll be sitting there for 8 hours. Okay, that's my promise. Okay. So please join at 6. We'll take break in between somewhere around 8, depending on the, like, when that topic ends. Around 8, we will have a break, 8 plus. Okay, 8 to 8:30, we'll take a break. Then again, we'll continue. Okay, so please be there. Magic is going to happen. Okay, you will see magic on that there. Right? Bye-bye. Bye-bye. See you. Next Thursday at 6. Bye. Good night.